Welcome to the live stream, ladies and gentlemen. I'm your host JT, and this is Black Box Trading. So we got smacked down last night, or it might have been the middle of the day for you, depending on when you're looking at the market. But man, we were looking so good when I went to bed, and then woke up to a frickin' smackdown. So we will take a look at that. I have my own theories as to what that is. So yeah, let's just get into it. Welcome to the stream. If you're new to the stream, hit the subscribe button. Don't forget to like, share this video, repost it on X if you're watching on X. Do all the things. All right. So, you know what? Before we get into the TA, let's talk a little bit about some of the fundamentals here, because that's going to lead into the TA. I think, like I've said multiple times on this show, I take sentiment into great account when I'm making my trading decisions. And this is the stock market fear and greed index. It's now below 20. The last time it was below 20 was the event, the C word event that you're not allowed to say on YouTube. You guys know what I'm talking about. And, when be greedy when others are fearful, and be fearful when others are greedy. It's one of the oldest sayings popularized by Warren Buffett that we have in financial markets. We are at extreme fear, therefore you should have extreme greed. I know it's easier said than done, but that's what we're looking at. Now, why would you be buying when everybody is fearful? Because it's speculated that we will be turning on the money printers soon. I agree with this speculation. I think a lot of what Trump is doing is suppressing the economy on purpose and getting his tariffs through, and causing a shakeup, which applies pressure to the Fed to start printing money. And Trump knows that the Fed moves slow. So when the Fed pivots and eliminates quantitative tightening, starts doing quantitative easing, and starts printing money, he knows that he has several months to, repair relations with other countries globally. So I think this is going to be the first real catalyst, in my opinion, is the money printer coming back on. The next FOMC meeting is due to come in about 30 days. Yeah, 34 days. So just over a month, which again lines up with what we've been saying for weeks now as far as the time frame that we're looking for acceleration. We've been saying like mid-May, somewhere around late April, mid-May is probably when the effects of the M2 money supply are going to take effect on the price of Bitcoin. You couple that with some cheap lowering interest rates, and you got yourself quite the little recipe for a PAMP. So currently the probability is also, and this is just, it's so perfect. I love it when the market's wrong. The market is not often wrong, okay? I'm actually of the mind that the market is the most efficient way to determine price, and it's usually not wrong. But I actually believe that the market's wrong on this one. So the market is betting heavily. I mean, we're 30 days out, but they're betting heavily that we're not going to get a rate cut. And I think that we are. I think that the market's wrong. So whenever the market's wrong and the outcome is bullish, you usually get a really large rally. So, fear, take the opposite side of the trade. You should be bullish. Printing is coming. The market's wrong. There's so much to be bullish about. So let's get in to what happened last night. If we're so bullish, what the heck is this? Why did we have this smackdown in price? My word, it's actually better visualized here on the 4 hour. We were rolling. We were rocking and rolling. We were making new highs. We came up to damn near a new high. Pretty close, but we got back up into that kind of that psychological range that we've been talking about, that high 80s, $90,000 range that we've been talking about, and boom, massive move to the downside. what I think this is two things. A, volumes are super low. Nobody cares about investing right now. There's a lot of fear in the markets. That fear is translating to, I don't want exposure to things. So it's not selling pressure. It's just lack of holding pressure. You don't have a lot of people willing to take bids. And then you have a smaller cohort of individuals who saw the breakout. Let's actually show you the breakout. We had this breakout. Let's go back to the daily. Breakout of this downward sloping line of resistance, and the market got excited on that technical breakout, and a lot of people went too long and they used too much leverage. If that's you, my heart pours out to you. Don't use excessive amounts of leverage, especially in this market. Bulls make money, bears make money, pigs get slaughtered every single time. So make sure that you are either a bull or a bear. Never find yourself being a pig, because this is what happens. This is what you got to watch out for. So we got smacked down as soon as we got above that. So, you know, a little bit of a delay for this to play out, but and a little bit of a setback. So I'm going to go ahead and say that this is a liquidation event to the downside. So too many people went too long on that breakout, and the market is just not liquid enough to, the spot market is just not liquid enough to handle the futures market being wrong. So a unique thing about Bitcoin, if you aren't already aware, this is unique to Bitcoin. Unique to the cryptocurrency market. The spot market is the settlement layer for the futures market. So if you're trading futures on the stock exchange, you're not going to have a direct and instantaneous effect on the spot market. So let's say you're trading Tesla futures, or Tesla options or whatever. The effects of that selling on the spot market isn't instantaneous like it is with a liquidation. When you're trading crypto and your liquidation price is met, it's instantly filled. There is no leverage in this system. The leverage gets removed. If there's leverage and you can no longer pay, it's instantly transferred onto the spot market. And that's unique to crypto, and it's annoying, because this is what you get. You get a long, it's a long squeeze. It's the opposite of a short squeeze. You know, a short squeeze just keeps on pumping. A long squeeze just keeps on dumping. So we had this major pullback here. I don't think anything has changed. If we take a look at the RSI, we don't really have a divergence forming here on the RSI, but I don't think the balance of supply and demand has fundamentally changed. So what I'm looking for over the next day or two, hopefully it happens today, but it might take a day of repair to convince the market to go for another go at the resistance, is I'm expecting another attempt to break this downward sloping line of resistance. I'm expecting another daily candle to try and break above this downward sloping line of resistance. If we get a daily candle close that closes above this white line, I think that that's going to be a pretty strong signal to the market that we can continue to rally. Now, we have to talk about the bear side. We have to address the bear side. If I don't address it, people will wonder why I'm ignoring something that, you know, somebody who studies the Wyckoff method, why would I be ignoring something that a lot of people might be seeing when looking at this consolidation from the point of view of the Wyckoff method? And that's this right here. So this structure, credit where credit is due, this structure looks rather distributional. It's looking like a distribution. And where we are right now, this area right here is considered a last point of supply. Now, if there's one thing that I've learned while studying the Wyckoff method, is that consolidations don't necessarily need to resolve the way that the textbook says that it does. What I've noticed is accumulations can take place in a very distributional way and vice versa. So what that means is when there is a lot of selling in the market, you'll see a structure that looks like a distribution. But that's just a reflection of a lot of selling taking place. It's not a reflection of us being at an actual macro cycle top. It's just showing that there's a lot of selling taking place. There's a lot of assets changing hands. Whereas when you're in an accumulation, it's very one-sided. You don't have a high amount of selling. You have a high amount of buying, and it just makes the range a little bit tighter. It respects the range, and you can continue to higher levels. So the bullish case for this distributional characterization here is that we're looking at a reaccumulation after decline, which means that we can rally out of it. We can rally out of it. But the thing for you to be aware of is if you follow the textbooks of a distribution, and we can quickly just jump over to the ETH BTC chart because that's been in a technical distribution that has played out. Where are you? Where is my ETH BTC chart? Don't even know where it is. I've stopped paying attention. Is this ETH BTC? No, that's ETH dollar. Man, $1,800. Sorry to anybody who's been holding ETH long term. There we go. ETH BTC. When we take a look at the ETH BTC chart, I have here the distribution. And the last point of supply is kind of the last area once you break below before it goes into a markdown phase. Okay, so that's the textbook interpretation of what we're looking at when we take a look at Bitcoin here. So it's certainly noteworthy, but I have to couple it up with the fact that the market is just so scared. And usually when a successful distribution comes in, it takes the market off guard. And for us to head down to lower levels is literally what the entire market is expecting. The whole market is expecting us to head to lower levels. So for that reason, I'm going to entertain more bullish ideas. Just because, if everybody thinks the price is going to fall, everybody's either short or they've sold. There's not really a lot of selling pressure that can come into the market if everybody thinks that we've, if we're heading down to lower levels. But it's certainly something to be aware of. It's certainly something to be aware of. So we will pay attention to it. We will watch that because there is an LPSY, a last point of supply, beginning to develop. But when we go back over to this chart, I'm going to probably spend most of the day here checking out the 1 hourly and see if we can get some divs. I'm still bullish. I think that, you could have some divergence opportunities begin to present on some smaller time frames. It looks like, we're kind of setting up for maybe some sort of a div situation to occur on the hourly. So maybe we get something like this. You'll get lower lows, and then on the RSI, we'll get something like this. So you'll get higher lows. If you see that, that's a fantastic opportunity for you to go long. So, not financial advice, but if we see that, we will be posting it in the private group. If you guys aren't already in the private group, come check it out. The last div that we called has played out beautifully. So we are putting all of our trades, all of our entries, exits, take profits, all of that stuff is available for free in the Discord. If you guys are in the Discord and you're not able to pass the verification, just start a black box account, leave the Discord, and enter the Discord again through the dashboard. That's going to be your easiest way in. Otherwise, you got to open up a support ticket and deal with us directly if you want access to the group. Yes, we are forcing your hand. Yes, we are making you set up an account, but we don't really ask for much. So that's Bitcoin. That's Bitcoin. Let's see how GameStop's doing. GameStop closed relatively bullish. It's got a bullish posture here. Let's see how the S&P closed. S&P closed not too bad either. I mean, it's up against a resistance as it stands right now, but like I said, sentiment's really low, lots of fear in the markets. I wouldn't be surprised if the S&P actually rallies out of this. Same sort of story here on the NASDAQ. I wouldn't be surprised if we rally out of this, come up to at least this resistance at around 20,000. So yeah, we're going to have to see again how the open goes. The US opens lately have been very important for your trading. So dial into those US opens. You know, in the earlier stage of the market, it was the Asia Open, it was the Chinese Open and the Japanese Open that was really having an effect. But now it's definitely the US markets are in control of what's going on with the price of Bitcoin right now. So definitely pay attention to those opening bells on the US stock exchange, because they're having a very significant effect as of late. So do pay attention to those. Let's pivot here and take a look. Let's see how MicroStrategy fared. MicroStrategy's got a nice, I don't know, maybe the MicroStrategy will probably gap down. You know, given Bitcoin's price, I don't think Bitcoin's going to recover to the price it was today. So expect a gap down in MicroStrategy. Yeah. Check the US futures. Give me some tickers, man. I don't trade stocks. And the futures have been wrong the last couple days as well. I've heard of the futures opening lower for the last couple days in a row. And every single day over the last couple days that the futures opened lower, it resolved bullish when the actual market opened. So I think the futures are kind of a false flag right now. The official market bell is much more accurate, at least for now. You always got to pay attention as to where the trends are and where the alpha is coming from and what time slots and what's affecting it. We've seen the futures close lower for a couple days now, and open lower, and they resolve at the official open to the upside. All right. Okay, so let's talk interest rates. So we briefly covered the interest rates and how we think that they're wrong. Let's take a look at the aggregated probabilities here. And we are going to continue in a downtrend. And the market thinks that we are at least going to get cuts as deep as 325 basis points. Where did I see that? In 2026. And where did I saw a big one here. Oh, that's too far in the future. Anyways, you can see that the trajectory is down. So overall, depending on, where the market is and, how things stack up, you can't really predict too far in the future, but ultimately the interest rates are believed to continue to go down. And when we look at the Federal Reserve interest rates here on this chart, we're up against a resistance. This is an area where we could see a pivot, and this is an interesting chart to pay attention to. So this is US INTR, for those interested following along on TradingView. What you want to see is the interest rates fall. So if the interest rates fall, bull market continues, we all have fun, yay, super fun. Interest rates falling, money gets cheap, money printer go burr, number go up. What you don't want to see is us continuing to climb higher, which ironically is the healthiest thing for the economy and for the world. But we live in clown world. So anything that is good is bad, and anything that is bad is good. So, you don't want to see the interest rates go up, even though they should go up. It will make everything more sound, everything more secure. If you want them bags to pump, you definitely don't want to take out this high at 5.6%. This is the kind of environment that was necessary to kind of get a handle on inflation, believe it or not. But yeah, I think we got one more pump. I think we got one more pump in us, one more little hurrah. And I think that, the elites are being told through messaging or whatever is coming. They're learning to read between the lines. And I think that the Federal Reserve and Trump are letting them know, hey, get your affairs in order because this train's about to stop. But as a part of that, I'm thinking we get one more pump. One more pump. Because we got to take the herd off guard. You would not be taking the herd off guard right now if we were to just collapse. What takes the herd off guard is us pumping. And they'll be like, what the heck is happening? Why are we continuing to grow? Oh my God, it looks like Trump's tariffs are actually a good idea. Look at how much, economic activity is coming. And as a result, look at all the profits here. We're like, whatever the narrative is that develops around us going up, it's ultimately irrelevant. But I do believe that prices will go up. I do believe there will be a narrative to justify those prices going up. And all you need to pay attention to is just the number go up. Do not pay attention to the narrative. Do not buy into any of that shit because this train will stop, in my opinion. Bitcoin dominance continues to climb. We covered this ad nauseum last time, so we're not going to cover it too much. XRP still kind of flagging, but still kind of getting droopy. Cardano falling back into the range. Solana looking actually quite shitty, to be honest with you. So Solana BTC looks like it could lose this support. It could lose this support. And there's really not a lot holding it up. You can see not a lot of structure built here. Basically no structure built here. No structure here. So there's not a lot holding up Solana till about kind of this area right here. So not great for the Solana fans out there, but it is what it is. It is what it is. Take a look at Sonic as well. Just a boring chart. Boring. Nothing really. I mean, it's kind of a waste of time talking about alts right now. Until we get a cooperation from Bitcoin dominance, until we start to see some red candles here, you're not going to have too much to talk about on alts. And man, am I excited to talk about alts. I am excited to be bullish on alts. It's really hard. It's hard to be a YouTuber and it's hard to try and grow a channel being honest with people in financial markets. It's just, I would love to grow based off of being honest. But the fact is, when I say things, I piss people off because it goes against their belief system. If they believe that they're going to make money off of something, and they believe that they're going to make a lot of money off of something, and they hear me telling them, no, you ain't going to make shit just yet, it pisses people off. It pisses people off. And it's not a recipe for growth. And I've been in all market environments. I know exactly how much of an impact a good market has on this channel. So kind of getting tired of saying the same thing, kind of getting tired of being bearish on alts. I'm ready for a change. I want to see the alts do well. I want to have charts that I can point to and get people excited about for, a myriad of reasons, helping people navigate through the market, but my own selfish reasons as well. I want my channel to do well. They don't have logic, to be honest. Yeah, but you know what? Money is a funny thing. You can throw a lot of logic out the window. Money is it's money and love, man. Both have this incredible effect to cloud judgment. You see it all the time. People who, fall in love with this person or that person and, they just don't see the faults. And, this person or that person who's married to a position. They're over invested in a certain ideology that's attached to a financial gain. They completely cloud their judgment. They're incapable of seeing what they need to see. And it's very normal. It's very human. So I don't fault people for, having the reactions that they get because you're just being a human. So, all right. what can we take a look at? Oh yeah, we had a request to take a look at stacks. So let's take a look at stacks. So STX, a layer 2 of Bitcoin. You already kind of got the vibe as to what I think about stacks, because I mentioned it in your comment where you asked about stacks. In my opinion, there is no such thing as a layer 2 if the transactional coin is not the same as layer 1. So a good example of that you can see out in the wild, Ethereum, Matic. So Matic was touted as a layer 2 to Ethereum, but with Matic, you had to use, or with Polygon Network, you had to use the Matic token to post transactions. That's not a layer 2. That's not a layer 2. That's at best a side chain. Whereas Arbitrum uses Ethereum. So the Arbitrum network is a layer 2 for Ethereum because it is doing everything that it is posting and finalizing transactions on Ethereum in Ethereum. Same theory applies, in my opinion, for Bitcoin. So is Stacks a layer 2 for Bitcoin? No, it's a side chain for Bitcoin. And Lightning is a layer 2 for Bitcoin because it uses sats. So with that out of the way, let's take a look at sats, because I do believe we're heading into a bull market. So does any of that even matter? Ooh, man, it's been rough holding to be a stacks bull out there. A lot of this was kind of driven by the ordinals boom. So if you guys remember the ordinals boom, like this is almost lockstep with the ordinals boom here. February 2023 and December 2023. This is the ordinals boom. So when Bitcoin was rocking and rolling and ordinals and BRC20 was doing their thing, and the bloat of the blockchain that was happening at the time, you saw all these narratives come out, and Stack was obviously a beneficiary of these narratives. And yeah, in a bull market, in a bullish condition, none of the fundamentals really matter. Because what a lot of people forget, and what they don't really realize, or maybe they realize, they just forget, is that the late stage bull market is noobs, right? And noobs are just trying to figure out what the fuck is going on. They're trying to figure out what is a Bitcoin, what is a blockchain, what is a privacy coin, what does smart contract mean, what does contract address mean? They know nothing. All they know is that if they buy certain things, the number goes up. So you can pretty much throw fundamentals out the window late stage bull market because they don't really matter. The only thing that matters is a digestible narrative, a catch line, a slogan, a phrase, coupled with positive price action. So what is the catch line for Stacks? Layer 2 DeFi built on Bitcoin. Boom. Easy to understand. This is a scaling solution for Bitcoin that allows for smart contracts. It might take a little bit of time for a noob to understand that, but that is digestible. Way more digestible than saying, no, this isn't truly a layer 2 because the underlying asset is used for transactions and the transactions aren't really, settling on the main chain. And then, we actually have covenants and RGB and asset creation on the base chain that can be like, fuck that. It's not going to happen. I'm sorry. So this is a much more digestible narrative. And in the right context, it's going to do well. Is it doing well right now? No, not right now. But it's, it's all wait and see. It's all wait and see. If you guys want to drop some tickers to some other stuff that I can shit all over, feel free. Chances are I'm not going to have too many nice things to say as it stands right now, but that's just a reflection of where we are in the market cycle. We can totally talk about the fundamentals and what I think will ultimately play out. And the fundamentals of Stacks are it has a very digestible narrative, and in the right context, I think this will resolve to the upside, and I think it will break all-time highs. So with that in mind, where could we go? From here, I think it's feasible for us to do a 10x from here. totally feasible to do a 10x from here or a 10x from lower. We don't know yet. Or maybe a 20x, you know, 10, 15, $20, somewhere around there, in my opinion, is feasible. I'm long in it anyways. You probably got in around the ordinals mania. Let me know. Is that true? Did you kind of get in around that that ordinals boom that was happening? BRC20 boom? But yeah, so, you know, that's the long and long of my analysis of stacks. Let's take a look at, well, TAP is just doing jack shit. TAP hasn't done anything. And you know, to the track fans out there, I don't think TAP is the play. So TAP is where a lot of the hype is, but ultimately TAP is a gas token, very similar to what we saw with Curve back in the last cycle. Like, there's no tap. There's no cap on tap. I'm getting my words minced here. There's no cap on tap, and there's no cap on Curve. You know, it's just an incentive tool. The problem with tokens that are 100% incentive tools, like their only purpose is just to incentivize behavior inside of a blockchain. You know, we saw the same thing with Axie Infinity and SLP, is there's no limit to their downside. So they do well in a bull market. They do well when the issuance is low and the available supply that's out there is not exorbitant. Like, it's not a crazy amount of supply that's out there. But as the supply grows, it gets more diluted. And the problem is, now this is not a short-term problem. This is not a problem for a bull market, but this is absolutely a problem over a bear market, is the issuance schedule doesn't slow down when the bear market is in full swing. And so you get just pummeled. You get hammered down. So, you know, there's this intrinsic selling pressure with TAP and Curve, for that matter, that just doesn't exist with the governance token like Track. So I'm much more bullish on Track. This is also kind of leaning into my reasoning for not wanting to stake my Track. Not going to get into the reasons like that. You know, I've mentioned it a few times, and we've talked about it in detail inside of the private Discord. So if you are interested in my rationale for that, hop into the Discord. I'm happy to talk about it, but I'm not going to bore everybody with this with my reasonings to do something so counterculture to Bitcoin. But yeah, the incentive for me to stake my Track is I get TAP, and I ultimately don't really care. So I don't want the TAP. I want the new Track. So I'll just wait. But yeah, the fixed supply, the narrative is realized on the governance token, on the validator token. So I'm just much more bullish on Track. But Track, as we can see, we're below the excited line. So I can't be too excited because we're below the excitement line. Once we get above the excitement line, it's time to get excited, but we're not there yet. I own some ordinals. Thanks, fam. That was helpful. Glad to be of help. Wake me up after we hit 72. These sharp rallies and washouts are bear market vibes. Yeah, totally. You know, it's an upthrust. It's an upthrust. But it's also, you know, that liquidation, there was nothing news driven on that. So in my opinion, it was a reflection of people being too bullish and going too long at that breakout. They were going too long at that breakout. I still don't think we hit 72. I think the low is in. Nobody has a crystal ball. Nobody can tell you what's going to happen next. But I think the low is in. My biggest driver of belief for that, as I've mentioned numerous times, is just the fact that sentiment is so low. Sentiment is so low. If you guys are in the trenches right now and you guys are, you know, allocated to Bitcoin and you're holding strong, congrats. Because especially if you're new, especially if you came in this cycle, congrats, because that's not easy. You know, the easiest thing to do in Bitcoin is to hodl, right? That's what you hear from everybody. It ain't fucking easy. It's not easy. It's very, very difficult. So kudos to you. Congrats, because it's an emotional whirlwind. It doesn't matter if we're in a bear market. It doesn't matter if we're in a crap market. It doesn't matter if we're in a bull market. Bitcoin is always going to toy with your emotions. Always. So get used to it. It ain't going away. You only learn how to manage it. And the easiest way to manage it is to actually get yourself onto a Bitcoin standard and start measuring in Bitcoin. But that's obviously not where a lot of people are in their journey. But, you know, when you start to measure in Bitcoin, everything I buy goes down. The price of my apartment is cheaper here in Dubai than it was for me in Bali, because I'm measuring in sats. So I'm paying less sats now in a apartment that's 3 times more expensive in fiat terms. But for me, it's cheaper. So, you know, anyways, that's a whole fucking rabbit hole. Forget it. Forget the rabbit hole there. I'm not gonna go down there. I also own a few track and I'm not staking it. So don't stake it. That's cool. But do be aware that there's a staking window. So if you haven't sold before the staking window closes, you will want to stake at the end, because failure to stake means your coins are not going to go to mainnet. So as long as you're aware of that, cool. But yeah, just be aware that there's a staking window. They're saying 4 months. Track is kind of notorious for delays, so I could see 5 or 6 being the reality. They're saying 4 months. If 4 months comes up and we're getting close and you haven't seen, if you end up wanting to just jump over to mainnet, you will need to stake. So kind of become familiar with what the process might look like. Maybe stake a tiny bit just so that you know what the process is like. And then understand, don't wait too long, because I feel like a lot of people are going to be doing the same thing. And that's going to potentially bloat the blockchain and make transactions difficult to get through. So just understand that. All right, any other tickers that we want to take a look at? Lots of people watching it. 58 people watching. That's getting up there. That's getting up there. We got 11 people on YouTube. 46 people on X. My God. Guys, I am so surprised by X. I am shocked. I am honestly shocked. I have been putting a lot, like X, you guys are diehards. Maybe it's just a reflection of where we are in the market cycle. You know, YouTube is more retail. YouTube is more people who are newer. And I'm not faulting anybody who's watching YouTube right now. Like, if I were you, I'd be watching YouTube. That's just the platform that I spend a lot of time on and I like, and I refer to myself as a YouTuber. But yeah, I'm shocked. 46 people watching on X right now. That's really cool. That's really cool. And only 11 watching on YouTube. I'm shocked. Okay. What else can we take a look at? I just love YouTube. I think X is cool as well. Yeah, X is cool. I'm just shocked. The reason I'm shocked is, you know, we haven't had video streaming to X in the past. And it was always YouTube that was the dominant force for streaming. Even when I would do Twitch, like Twitch is supposed to be the streaming platform. When I would only stream to Twitch, I lost a lot of viewership because a lot of people were on YouTube. But man, I'm really shocked by how many people are on X. Curve. I don't know if Mauricio's watching right now. I don't know if he's lurking on the chat. But this is one that he's watching. And it's looking clean, man. It's still looking clean. Even on red days. Even on red days, it's looking clean. Coming in for a 3-day bullish cross as well. Add curve to your watch lists, ladies and gentlemen. Don't overcrowd your watch list. You should not. If you're new to this, it's going to be hard for you to pick just a small basket of assets. So I'll tell you what I consider to be a reasonable maximum for you to have allocations. Maximum 10. In a perfect world, I'd tell you 5, but if I told you 5, you're not going to listen. Because you just have so many ideas that you think are going to play out. Maximum amount of altcoin allocations, 10. And that's, in my opinion, hard to manage. But add it if you wish. Add it if you wish. Thoughts on ICP? ICP is a big player in the events game. They are always very present at events. But they just don't do jack shit in terms of price appreciation. It's not the strongest asset out there, if I'm being perfectly honest. And I know that that hurts a lot of people. I got one guy who comments all the time for me to look at ICP, and I want to report good things about ICP, but I'm just not seeing good things about ICP. You know, when the bull market kicks off, it all turns around, right? But we're looking at the now. We're looking at the here and now. And the here and now ain't great. The here and now ain't great. So when we get above this downward sloping line of resistance, here's the bullish thing that I can share. Okay. This is as bullish as I can get on ICP right now. Rounded bottoms. Rounded bottoms show strength. They show strength. So we're looking at another rounded bottom here. It means we can probably go down a little bit more, but we're pretty much at a floor. And if we have this kind of rounded bottom formation take place, I think that you've set a very good foundation for a rally once this trend line has been broken. But until that trend line breaks and until this bottom is formed, it's just, that's it. It's just, it's not really anything to get too excited about. The fundamentals are cool. It's track and tap, use ICP for contract settlement. But, you know, that's cool and all, but nobody needs the token to actually execute on that stuff. And that's the tricky piece. That's the tricky piece. Like Tap and Track are using ICP to run their apps and perform Bitcoin smart contracts. But the end user at no point during their experience ever needs to buy ICP. The end user has to buy Bitcoin. So it's like, I don't know. Are the right incentives there? I can see a cup and handle. Well, the cup and handle would have been this, right? I mean, it's a slanted cup and handle, I guess you could argue. You know, you got your cup and you have your handle, but you got this other handle over here. So you got this cup and this fat finger handle. So you can either break the downward sloping line of resistance, or you can break the top rim of the cup. Both will be showing you that we're ready to start rocking and rolling. And both of these scenarios, I think, are going to take a while to play out, which is fine because we have a while. I'm not expecting acceleration in the market till the next FOMC meeting, which is May 7th. So again, that mid-May that we keep talking about is the area of interest. 69 people watching. This is wild. True, lol. And, you know, I'm not like poo-pooing on, is it a cup and handle? Like a cup and handle, you can have a cup and handle. It doesn't matter. Like the textbooks, effectively what a cup and handle is identifying is it's identifying a very staunch resistance point. That's what a cup and handle is doing. So it doesn't matter what the fuck's going on in here. Doesn't matter what the fuck's going on below it. You've identified the resistance. And when price shows that it's strong enough to break past that resistance that it hasn't been able to do in years, it's bullish. So however you want to draw it, however you want to look at it, once we break this clearly defined resistance point, it's off to the races. We're strong enough to overcome years and years of price action resistance. But it all starts with this line, I think. This downward sloping line of resistance. That's all that I would have on ICP. You're very welcome. Let's take a look at some DPIN, some decentralized physical infrastructure. Is that doing jack shit yet? Truth be told, I always kind of laugh at DPIN stuff. Because they make, I don't know, it's like, it's decentralized physical infrastructure, right? It's a very buzzwordy piece of bullshit right there. You know what else is decentralized physical infrastructure and is probably the most developed and advanced and like massive decentralized physical infrastructure? Miners. And they never get mentioned. And the miners, like the Bitcoin miners, are massive. There's warehouses full of them sucking fucking geothermal out of volcanoes and steam vents in El Salvador and Greenland and all these places, or Iceland. And you know, they're never mentioned as being decentralized physical infrastructure. But what is it? It's a physical device in the physical world that is supporting a decentralized network. So it's, I don't know, I'm kind of trolling a little bit, but I also feel like DPIN is kind of a troll. So Peak, I don't know what it does. I don't know what Peak does, but it, you know, what are we talking about? We've been talking about this a couple times now. What is strong about this structure? It's rounding. Rounded bottoms are strong. Rounded bottoms are strong. If you learn nothing else about like structure of a candle pattern, I don't really follow the textbooks too closely. I try to interpret what is happening as far as like the price movements. When you're in a downtrend, it's quite clear that the price is going down. That's not rocket science. That's very easily digestible. But when it slows down, the price is falling less quickly, right? So you follow me so far. And then when price tightens, it means that, you know, the price discrepancies from day to day are kind of fluctuating all around the kind of similar range, which means that the market has found an equilibrium of value in a market environment where people don't care about it. So that's why I call it a floor, because, you know, nobody cares about this project and price has found some sort of equilibrium, and its price action is very tight. It's not really going up or down. It is going up and down if you really zoom in, but it's not really going anywhere. And nobody cares about it. So you've found a floor. You've created a base. So the moment people care about it, we can only go up off of that base. We can only go up off that base. So don't ask yourself, like, what pattern am I seeing? Ask yourself, what are the people doing here to create this pattern? Always think about the people behind the candlesticks. What is the natural behavior that's happening behind the candlestick that's creating the pattern? Don't just take a pattern at face value and be like, oh, it's a triangle, it's going to do this. Oh, it's a cup and handle, it's going to do this. No. What are the people doing to have created that pattern? And what do the people need to continue to do for this pattern to break out? This is another one, some decentralized SIM card bullshit. This one looks rough, actually. See how the difference, how it's like, it doesn't have a rounding bottom, and it just looks like it's going to repeat this massive pump. These are probably events. Like, this is probably token 2024, and then, you know, we're going to do nothing, and then token 2025 is going to happen, and then it'll just, so not a great asset to look at. ATH, downtrend, not really doing much. I guess you can argue a floor, but it's not as clean as Peak. Peak looks clean to me, at least. Silver, what's silver doing here? Demo, yeah, DPIN looks like shit. DPIN looks like shit, let's be honest here. Speaking of miners, how about Pi Network? I've been mining for 2 years and it uses a phone to mine. That's fake mining, sir. It's not real. I'm not going to get into Pi. It's a whole big rabbit hole. But that's simulated mining. It's not real mining. So, you know, you download an app on your phone and your phone becomes a miner. It's not actually mining anything. So, you know, just do a few Google searches, or you know what, better yet, ask ChatGPT. Ask ChatGPT what he thinks about mining on Pi Network, and is Pi Network an actual miner? Is it contributing? Ask those tough questions to ChatGPT. I'd be curious to see what it says. But it's simulated mining. And I don't know. I just get shady vibes from Pi. Let's take a look at Doge. We haven't looked at Doge in a while. Doge BTC is within the range of you to consider it. So Doge is a unique asset. Doge is a unique asset because A, it's an OG, but B, and more importantly, let's actually go to Doge USD. It is actually decentralized. Doge is actually decentralized. So even though it's quite literally a joke, even though it's got no future as far as, you know, the future of finance in any way, this is not the SOS. This is the SOS. We'll relabel that. It is actually decentralized. So you do not have insiders inside of Doge. And as far as the call, if you guys were still in the trade from our call, we're still 100% up on that trade. But what was I saying? It's it's actually decentralized, which means it can't be manipulated. I mean, there's no insiders is what I mean by that. So because there's no insiders, it's kind of a whale. It's a Bitcoin whale's favorite shitcoin. So when this does flip in favor of, when this flips in favor of a bull market, a lot of the OG Bitcoiners that don't really pay attention to the newest, latest and greatest shiny little thing in the market, they just keep going back to Doge. And when Doge goes, it goes hard. So I still think that we could see some impressive levels in Doge, but it's entirely dependent, like everything that we've said so far in terms of the alts, it's entirely dependent on Bitcoin dominance beginning to fall. So until Bitcoin dominance falls, nothing to be too excited about. But I do like how Doge does not have insiders. There's no like secret supply of Doge in a wallet, in some whale's wallet waiting to dump, unless that whale accumulated the Doge in a fair and honest way. If a whale dumps on you because they accumulated an asset fairly, that's fair play. If a whale dumps on you because they're an insider that just got a token allocation, there's some KOL that's just going to shill the shit so that they can use you as exit liquidity, that's not okay. So I align with the ethics of Doge as a pump and dump because it is an honest pump and dump. And if you're going to screw me, I would prefer that you screw me honestly. So that's Doge. And, you know, technical here, we're sitting right where we thought we would sit. Right at the top of this this trading range. Let's actually redo this trading range here. Let's get rid of that. Let's open this up to basically there. Let's drag that back. That's pretty picture perfect, actually. That's a pretty picture perfect Wyckoff accumulation range coming in for our backup phase right here. So if this level holds, I mean, the pump is primed. We're ready to rock. We're ready to go to higher levels. We just need that catalyst. And like I've said a couple times already, I believe that catalyst will be lower interest rates in May. So May is going to be... That's going to be when the fun starts. May is when the fun starts. Hit the likes, ladies and gentlemen. If you're watching on YouTube, hit that like. If you're watching on Twitter, reshare, like, retweet, show this to as many people as you think would find value out of it. I appreciate every single one of you. It's time to get bull market ready. It's hard to find people in this space that aren't shills. I get people emailing me pretty much every day. It's slowed down a bit, but it's starting to pick back up again, which makes me think that the bull market's ready to pick back up again. People emailing me every day to shill tokens, and you know, I will never accept money to shill a token ever. Our shill over here on the channel is the exchanges. You guys are going to use the exchanges anyways. I may as well get a kickback from you using the exchanges that we trade on. You know, you got to sell something, but yeah, I don't take paid ads. I give you the brutally honest opinion on the market. I'm not going to tell you everything that you want to hear. I'm going to tell you what I think you need to hear. So if you guys appreciate that content and you're sick of the noise, you're sick of the people who just tell you what you want to hear because ultimately they don't care about you. They care about likes. They care about clicks. They care about all of the stuff that affects the algorithm. If you want to support somebody that is going against the grain, going against the algorithm, then hit the like button, retweet this, and let's try and show people that it is possible for good quality content that is not catered to an algorithm to actually be able to grow in this space. Obviously, that's going to get a lot easier when I have nice things to say about alts. But in the meantime, let's see if we can get the word out there. I appreciate all of you. What else can we take a look at? We've been kind of yammering on for an hour here. That's usually when I wrap things up. We'll take a look at one more. So you guys, the first one to spam their ticker in the chat. ES, SPX future. Okay, yeah. Thoughts on gold? All right. Yeah, let's take a look at gold. Let's take a look at gold. Then we'll recap Bitcoin and we will get out of here. So let's go to gold. My thoughts are on gold is we're topping. So we've got a bearish divergence playing out here on the RSI. This is on the 4 hour. That's way too close. Bitmap, that's a good call. We will take a look at Bitmap, but let's do it on tomorrow's show. I'll make a note and we'll cover Bitmap on tomorrow's show. Gold's topping. So I think what you need to watch out for, we could rally a little bit higher, but I feel like we've seen a bottom in the S&P. If we have seen a bottom in the S&P, that's going to signal that the market's flipping back to bullish. And if the market gains confidence and security in the market, gold will pull back. I mean, like we said at the beginning, like, where's the fear? Go to the fear. Where's the fear? Fear. We have not seen, it's 19 in the stock market. We haven't seen this much fear since that event that happened in 2020. So that's a massive amount of fear. And in the face of fear, gold does well. So if that fear is coming to an end, if the cycle of fear is shifting into a cycle of optimism, now that, you know, everything's kind of laid out and the market can truly correct and show you where we go from here, then, you know, gold's going to pull back. Gold's going to pull back. So really what we need to watch out for is the S&P. So if the S&P rallies, the S&P reclaims this level and starts to rally, dude, gold's going to pull back. Gold's probably going to pull back. Maybe, I don't know. It depends how long we rally for, but I wouldn't be surprised if we go on a large rally and the S&P hits new all-time highs again and rallies, you know, 10, 15, 20% above all-time highs, we're probably going to take out this low. And we might come back down to the 200-day moving average. So that would shave damn near, you know, $500 off of the price of gold per ounce. But none of that has actually happened yet. We're only speculating that we're seeing a floor in the S&P. We're only speculating that we're seeing a floor in the NASDAQ. So therefore, we're only speculating that we're seeing a top in gold. So a few things need to happen before we flip bearish on gold. Everything that we look at in terms of gold is bullish. So, you know, we're in bullish alignment on the moving averages. The wave is green. We're on a fresh breakout from back in January. So this whole year has been nothing but up only. Gold's looking really, really strong. The only thing that I'm currently speculating on is I think the strength of everything else is about to get a little bit stronger. So if that brings investor confidence in, then we'll see gold come down. Quick little recap on Bitcoin. Let's see how we're doing. Let's see how price is developing. Go to the 4-hour. Yeah, you know, this knockback is definitely a setback. So I expect this to resolve. I'm expecting it to give another attempt to the upside. I think we're going to try and break above this downward sloping line of resistance, but it'll take a few days. So a couple of days to resolve. I think if we bounce back right away, that's great. That's fantastic. That's showing way more strength than I already currently see in the market. So if we do actually break out past that point today, very likely happens at US Open. If that happens today, we're strong. We're strong. So if we're not, then we'll, you know, it'll take a few days. I'm anticipating a few days, but I do think that we're going to go back up there and take another look at things. All right. Thank you all for joining in, everybody. Really appreciate you. Don't forget to hit the subscribe button. Don't forget to repost this on X. If you haven't already gone and checked out blackbox.pro, go to blackbox.pro, that is BLKBöX.pro, and sign up for a free Bitcoin trading bot. This also gives you access to our free VIP Discord server where we are sharing all of our trading ideas, all of our altcoin investments, our entries, exits, take profits. All of that is included for free. All you got to do is sign up with one of our partnered exchanges. Follow any of those partner exchanges in the chat. We are partnered with BitGet. We are partnered with Blowfin, and we are partnered with Bybit. All of which have deposit bonuses adding up to $50,000 if you go with BitGet. So, thank you all for joining in, and until next time, please trade safe. It is a jungle out there.